Moving on to incorporation of current ratio in credit risk analysis. How this current ratio is calculated? It is simple. It is current asset by current liability. So what is current assets? The assets which can be converted into cash within a period of 12 months. What are current liabilities? These are all the liabilities which have to be repaid within a period of 12 months. Now, what is the purpose of calculating this current ratio? It is basically to measure liquidity. That is, if current ratio is greater than a benchmark level, it means that business entity has comfortable liquidity. Liquidity means ability to meet your short-term obligations, expenses without much difficulty or without much cash strain. Okay, right. So the purpose of calculating current ratio is to measure liquidity. Ratio above benchmark indicates they have comfortable liquidity. Ratio below benchmark indicates that they are in strain, and ratio below 1 indicates that they are in severe liquidity strain, and this organization will face liquidity crunch or cash crunch. Okay. Let's see how this current ratio is factored in credit risk analysis. The parameters that will be considered are latest ratio, 3 years average, industry average. If latest ratio is greater than or equal to 1.50, then the CRA models will give highest mark, and if the ratio is below 1, it would fetch lowest mark or 0. And the reason why the ratio below 1 is fetching lowest mark is ratio below 1 indicates that current liabilities have been used for creating long-term assets. Okay, current liabilities have been used for creating long-term assets, and that's why the ratio is below 1. Or to put it bluntly, there is a diversion of short-term funds for long-term purposes. That's why the ratio below 1 is viewed very, very seriously. That is with respect to latest ratio. And when it comes to comparison of latest ratio with 3 years average, if latest ratio is greater than 3 years average, it is considered as best, so it will fetch highest mark. And if the latest ratio is below 3 years average, it is going to fetch lowest mark. Then industry average is also there. If latest ratio is greater than industry average, it is going to fetch highest mark in that parameter, and if latest ratio is below industry average, it will fetch lowest mark. Okay, and here the weightage, in terms of weightage, highest weightage is for latest ratio, and this 3 years average and industry average, they fetch only lowest weightages. Okay, let's take an example to understand. Look at this. Latest year current assets are 50 lakhs, current liabilities are 45 lakhs. So if you calculate current ratio, that is current asset divided by current liability, the ratio is 50 lakhs divided by 45 lakhs, it is 1.11. Okay, we also have past 3 years data. Past 3 years data, let's say year 2 it is 1.20, year 1 it is 1.40, and latest year, okay, it is 1.11. So if you take average of all the three, that is 1.2 plus 1.4 plus 1.11 divided by 3, it is giving you 1.24. So what you note, latest ratio 1.11 is below the 3 years average of 1.24, because there's a kind of a fluctuation. From 1.2 it has increased to 1.4, then it has come down to 1.11. So the average is 1.24. And there is also industry norm, assuming this is manufacturing sector. Industry norm assumed as 1.33. It varies actually. Okay. So if you compare the latest ratio with industry norm, in that aspect also it is lesser, because latest ratio is 1.11, whereas industry norm is 1.33. Okay. Now let's try to assign some marks for these ratios based on 3 parameters. So here I have the score bands. If latest ratio is greater than or equal to 1.5, it is fetching maximum marks, and if latest ratio is below 1, no marks. Okay. In our case, it is 1.11. So 1.11 is greater than or equal to 1.1 category, so it will fetch 1 mark. So look at here. Particulars, latest ratio is 1.11, and this comes under the band 1 greater than or equal to 1.10, and so the score is 1 for latest ratio. Then we'll also look at 3 years average. What does 3 years average band says? Look at the band. If latest ratio is greater than average, it's 2. If latest ratio is equal to average, it's 1. If latest ratio is below average, it's 0. Okay, in our case, what is 3 years average? It is 1.24, whereas latest ratio is 1.11. So latest ratio is below average and it comes under this band. So the related score is 0. Okay. Then comes industry average. Industry average also has a similar score band. What you can see, if latest is greater than industry norm 2 marks, equal to industry norm 1 mark, below industry norm 0 marks. So in our case, industry average is 1.33, whereas latest ratio is below industry norm, and so the relevant score is 0. And here you can see, if you factor all the three, this is going to fetch only 1 mark. Okay, and if you change the numbers, then based on the bands you can pick up. But again, I'll reiterate. See, these are all the bands, score bands, which I've taken on an average by picking the data from various banks. Okay, so bank to bank, this could vary. Bank to bank, this band could vary, the scores could vary, but what we have to appreciate is latest ratio got to be higher, better than the previous years, better than the average, better than the industry norm to get better marks.
Thanks for watching this video and I hope you liked this lecture. If you wish to learn more on the areas related to this topic, check our comprehensive course. I have shared the details and link in the description below. Click, sign up and enroll. I'll see you inside the course.